Good evening, everyone. I hope you all having a wonderful Thursday evening, afternoon, whatever time of day it is that you were watching this video. I hope you've had a wonderful day overall. If not, then I hope it gets better. We're going to be reviewing the ES today, futures, S&P 500 futures contract. We're going to be reviewing basically what occurred today and then a few trades that you could have taken uh, throughout the day. I did not take any trades as today I was busy for the most part, and then on top of that, just overall, a day like today, I tend to trade not very well. So I just wanted to kind of sit back and not have a position on because there was some mixed market generated information early on in the day, mixed MGI, and whenever there's something like that occurring, I tend to try to stay out the market because I like the price action to be easy and I like the price action to be in my favor where my edge is most available. So, with that being said, having no position is a position uh, is always one way to look at it. No position is a position, right? It just means I'm protecting the capital. I'm not doing anything to risk it. As today, obviously, there was a lot of up and down, and people definitely got chopped up in here. As we have I believe, a 12 wide point of control, right? 12 or 11? Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We have an 11 wide point of control, or you could say a 12. Yeah, we're going to say 12 here at F's high. So we have a 12 wide point of control at F's high, right? Um, Not a whole lot that occurred other than a large liquidation break in B period. We did fill the gap in A. Actually, let's back it up a minute. Let's talk about A period. So A period, crazy, right? So yesterday I said the daily went from uh, down to balance, right? And then we're going to use all of yesterday's range as the balance, right? All this whole day would have been the balance. So with that being said, today we opened with a gap, a monthly gap that is, because today we started the beginning of December. So we opened with a monthly gap at 40.95.25. So above yesterday's close at 40.83.50. So we opened above, we had a gap initially, and then we came um, after filling the upside gap that I've been talking about for a long time on the daily. Remember this gap that I've been talking about trying to get filled up here for a long time? This gap's been up here just waiting to be filled. So we finally filled it today after several weeks and 2 months, I believe, 2 months of time. We've it finally got up and filled that gap. So that's what occurred. We filled the gap on that upside. Couldn't find any acceptance above that. If we had, then the next destination for the upside would have been that 11 wide pot from September 12th. But because we could not find acceptance above that and hold the monthly gap, we rolled back over, came back through the opening in B period, took out A's low, and then eventually filled the gap. And once we did that, all the week longs from the overnight session began to liquidate. Anybody that did buy above the open, thinking that we were going to gap and go, began to exit their positions, which caused a pretty hefty liquidation break here in B period as the market sold off into the filling the gap, into the price probe, and then into that set of single prints. Now remember, set of single prints, all that means is that this is an area you can look for responsive buying, right? This is what people would say is a support, an area of support. You're looking for people to buy in this area, right? This is a support zone, right? Just as you would use like the gap fill here as an area of resistance, right? This area is a support zone. This means that there are trapped shorts in here, a trapped position, meaning that if we pull back into it, you should find a bid. Also, we had the 200-day moving average right below inside that set of single prints that we look to backtest in B period. Once B period pushed down into it, I believe we had a little bit of a responsive bounce. Let's look here on the 5 minute. I believe you can see that here on the 5 minute chart that once B period liquidated and we got in there, we did find a little bit of a responsive bounce kind of going into C period. It was right here at 25, right once we rolled over into C period at 30. Did take out in C period, we took out the initial balance low, but not by much. B period's low was at 40.57.75, and then the low was 40.54.50. So we didn't take it out by much, only 3 points. You know what I mean? 3 points. Uh, and if you decide to short because we took out the initial balance low in a side of a set of single prints with that 200-day moving average, once we got back into B's range, it was game over. They began to cover. Bids were holding up the market here, and we rotated back up. So that was a good long opportunity in my eyes. Um, Being a buyer in this set of single prints was the smart play because you had the 200-day moving average down there to help support you, right? So let's just say you decide to take this long, right? You decide to take the long at B's low, 57, right? 57.75. You decide to take it against that inside the set of single prints. You know, your risk, let's say you put your stop down here below the 200-day moving average at 52. You're risking 5 points, right? And your target is to come back up to the previous day's high or even the open. So once we got into that area, you take a long position, knowing that this is an area where shorts covered and bids are lying, or people that are looking to buy an area of support. You come into it, you take the long. Maybe you add in, you take one lot here at 57. Maybe you add at 55, and you know you're still risking. Your risk is still there, but you know where your out's at. Once we seen that we held and we started to come back up, guess what? You can start peeling it off, right? You took that long 60 64s, right? 64, 67. You took those longs and now you can start divvying it out on the push back up. Sell it out at 73. You sell another one out at 83, 84, or maybe you don't hold it until that. Maybe you decide to just hold it into this 9 EMA, which is at 70, right at 70. So you just went from 57 to 70. It's a good 13 points, right? You made a good 13 points. You risked 5, good 13-point gain. And then if you decide to hold up until the high previous high day, 83s, I mean 23 points. You risked 5 to make 23. Overall, a great trade. And then once we decided to not hold or not rotate up any higher, you could have waited until we pulled back again. Here in F period, you could have taken another long against that set of single prints. Take the long, you put your stop below C's low, because if we get C's low, then you're more than likely going to see the 200 day and then maybe fill the set of single prints. So you put your stop there, right? Uh, 54.50, you start buying 62s. You got a little bit of risk on the line here, but not a whole lot. And you look to maybe take it off on the rotation back up once again, right? Taking trades like that against the set of single prints. That's why market generated information is so important. Is knowing where these levels are, knowing where to take a buy, uh, knowing where to take a long. I mean, look, that pullback right there in E and F period. I mean, it doesn't get any cleaner than that. You take the long, and boom, you're back up here to VWAP, right? all day long. That's all that was happening. We were rotating down low, take the long, sell it at VWAP, and you could have even taken the short side of the market. We had a wide point of control. That just all that means is that there's a lot of this is the mean. Could have taken a lot of mean reversion trades. You could have taken trades to come back to this area where high volume was at. So in B period initially, we had a set of single prints. They were relatively large. We took back a good portion. Right here is resistance for the good portion of C, D, E, F, and G until we finally filled it in H period. So let's say right in here is resistance, right? That's where your resistance is. This is where your support is. You're buying here, you're selling here against that set of single prints in B period because that's where longs were. They sold out, so you got trapped longs there. So you know there's going to be supply, which is also where VWAP is, right? We really couldn't get above VWAP, so you sell there. If you didn't want to take the long down here because you've seen that there was more market generated information to the downside, such as a reversal bar in B period, one time frame and down, took out the initial balance low, we took out the overnight low. Sellers had the opening at the time, pretty much all day long they had the open. So seeing that there's more market generated information inside in favor of the sellers, then once we pop back up, take the short against that set of single prints in B period, right? You look to take the short against VWAP against that set of single prints. You take if you fill the set of single prints, then you get out, right? At the time, VWAP's at 83. Set of single prints fill in B period. They filled at 88. So once again, you risk 5 points to rotate back down to the lows. So you sell here against that set of single prints in B period to rotate down lower because you couldn't get above VWAP, you couldn't fill the set of single prints. You got a poor high against C, sell it, let it rotate back down, buy back, rinse and repeat. It sounds easy, but a lot of times the price action tends to be pretty choppy and short-lived. So it would require you to hold for longer periods of times, and I don't necessarily like doing that. So that's why I stayed out of this market. But it didn't mean that there wasn't opportunities to take the trade or take a trade. Longs here against that set of single prints below, shorts up here against VWAP and the set of single prints until H period filled it, and then the rest is history, right? Uh, but because, like I said, I had mixed MGI early on in the day with a gap, the daily going to from balance to one time frame and up to now, uh, filling that upside gap, holding above the 200. We had the overnight high as well. Um, Things like that were the reason why it kind of made me skeptical about taking trades today. I didn't know which way the market was going to go at the time, so I didn't take a trade. That's why you do reviews like today, like I'm doing right now, where you see where opportunities were. That way, the next time there's a day like today, you kind of know what to look for. You know to look for trades against single prints. You know what to look for in the future. So if you're a trader, somebody that likes to take intraday trades, then that's something you look for, right? Uh, so with that being said, I just wanted to review some opportunities that were available. The market ended in a B shape, which is just liquidation, long liquidation. So if you were to kind of look at this, it would look like a B, a lowercase b, right? And then whenever there's a short liquidate or a short covering rally, and we have a wide point of control, typically it looks like a P shape. Today it looked like a B shape. And if you were to look at the IWM, that is a prime example of what a B shape looks like. Pretty perfect. But let's go ahead and put in our destinations for today. Also, we closed above that price probe, which is a bullish thing. We closed above the 200-day moving average. Also a bit bullishness. We do, however, have some more economic data coming out tomorrow, which could ultimately put all this back into a balance. If the market doesn't like what they see tomorrow, we take out today's low, then we put the daily back into a balance. We put the market back into a balance, and then we wait for more market generated information, such as finding acceptance above the 200-day moving average. And we'll talk more about that here in a second. But for now, let's look. Let's go ahead and put on our destinations. I don't know why this isn't selecting. Okay, low of day. Right here it's 50. So this is now where single prints start from the 30th as well as our low of day from today on the 1st. Oh, don't know what happened there. I guess I hit the escape button. Clearly, I don't know how to click either. If anybody wants to teach me how to use a mouse, come right on over. 1201, low of day as well. So now we look, if we were to pull back, we look to take a long against that low of day set of single prints. If the set of single prints fill, you get out, see what happens at the next set, right? We have our 12 wide POC. Another thing is you could use F period as an afternoon pullback low, which is typically when the market has a liquidation, right? Uh, and we hold like a specific area. But F period's low is right around that price probe area, kind of a line in the sand for anybody that's buying because we never did get back down to that area throughout the later portion of the day, GH or G through M. We never seen that low again. So if we did pull back, that's kind of a line in the sand. You could maybe start a position there, right? And then if we were to pull back and take out the day's low, then you can look to get out of that position because at that point you're more than likely going to fill that set of single prints. But for now, let's go ahead and put in our point of control, otherwise our mean. We had a pretty wide one today. Once again, 12 wide, pretty significant, almost a perfect point of control. 12 wide, puck, 1201. Point of control, boom, that's in there. And then we have our high day today at 410, 4100, 10, 4110. And we'll mark that high day 1201. So, destinations. We have today's upside 4110, that 11 wide POC from September 12th at 4126.25. Then you have the high day from the 12th, 4137.75, and then you have a trend day above that will look to take back a portion of set of single prints at 4142, 4144 where they fill, and then we have another pretty large set above that. So if we were to take out today's high, the daily would continue to one time frame up. So if we take out today's high, then we will look to trade up to that 11 wide POC. If we can get through that, then we look to trade up to that previous high or that high day from September 12th. Now, uh, downside, we got today's 12 wide POC at 40.78.25. Today's low, and where single prints start at 40.54.50. 200-day moving average at 40.52.01. This is also just for RTH. So RTH is there. The um, full session might be a little bit higher or lower. I'm not sure. I only use RTH whenever I'm trading the RTH or the real time trading hours. So, but today's low 40.54.50, 252.01. Single print fill at 40.44, and then we have the set of single prints below at 40.28.25. 4,850 is where they fill. So if we take out today's low, then you look to see if that set of single prints fill at 40.44, and then we will look to rotate lower into the next set of single prints. If we open up inside today's range, Then you look to trade around this 12 wide POC for a good portion of the day until we get a directional move, maybe after the data comes out. I'm not sure if the data comes out before the market opens or while we're in the trading hours. But we'll look to see what happens tomorrow. Let's go over the weekly and the daily. So weekly, pretty interesting right now, right? We are one time framing up still on the weekly, but something to keep in mind is we've had these back-to-back lower highs come into the market, right? We have why is my stuff not working? Hello, mouse. Do you want to click? All right, it's just TD Ameritrade. Never mind. But we have okay, I'm done. I give up. We have this low up here, right? That low. We have this low or this lower high, this lower high, this lower high. Do we break above finally and attack this lower high and then maybe start to trend upward going into the end of the year and into the new year of 2023? If we can't find acceptance on the daily above the 200-day moving average, then we're likely to have set our lower high. I don't think that's the case considering how close we are to the end of the year and we couldn't take out this previous week's low. So I think maybe there's a good possibility that we do go and test the monthly balance high. And for me, the monthly balance high or the top of the monthly range is August's high at, where's that September? Am I using, yeah, I'm using September's. I'm not using August. September's high at 41.37.75. So if we get above that, then the monthly goes up for me. We go from balance to up on the monthly. So the daily needs to continue to one time frame up. The weekly needs to continue to one time frame up until we get above this high here at 41.37.75. We get above that, then the monthly goes up. So line in the sand here for sellers. Line in the sand, pretty important area for buyers looking to get above. Daily. And once again, I know my videos are long, but I like to explain. I'm pretty passionate about this, and I just find this stuff absolutely very intriguing and interesting. Uh, just always, it's just a big jigsaw puzzle. I love trying to figure it out. But once again, you can see here on the daily, lower high, lower high, lower high, lower high, lower high, lower lows, lower lows, lower lows, lower lows. So, do we find acceptance above the 200-day moving average? Is the question. Does the economic data that comes out tomorrow start to affect how we trade? Moving averages are starting to turn up, which is a positive, but the big one is the 200-day moving average. If we find acceptance above that, then we will look to continue to one time frame up until we get to the top of that monthly balance up here, right? We look to get above this daily high. If we do that, then we look to attack that big high at 42. What is that high? 4206, right? Monthly would be up at that point, and with a good possibility we're breaking out of this trend down, and we're going to start going up into the new year. So big battle going on here between that trend, the monthly high balance highs, and the 200-day moving average. If we can't, then you will look to rotate down lower, test those weekly lows again, and then maybe we'll come back and fill this gap before the end of the year. All gaps get filled eventually. Keep that in mind. All gaps will get filled eventually. So if we don't fill it this year, we may fill it next year or the year after that. But all gaps do get filled at some point in time. Um, Other than that, ladies and gentlemen, I hope you all have a wonderful day, wonderful night. Thanks for watching. If you have stuck around this long, I do appreciate it. I know it's like watching a whole episode of nothing but charts. And you'd much rather be watching some Netflix. But if you're here for a reason. I hope it's to learn. and or support, and I do appreciate it either way. Hope you all have a wonderful night. We'll catch you in the next one. See you.